Hello, folks, and welcome back to another edition of Money in Motion here. Today is the 14th of July. And wrapping up a very exciting week in crypto overall. Um, Not much going on today. I guess most of the crypto equities are flat, other than Coinbase opening up about 4 or 5% today. We'll see where the close ultimately ends up. Um, after yesterday, XLM and XRP down 7%, XRP down 5%. So pulling back a little bit from those massive gainers yesterday. But Monty, anything you'd like to start off with? I just didn't check the NASDAQ until now. I see we're up 50 basis points and ripping to
Yes,
continuous highs. That's
yes,
interesting.
we are, CJ. Things may not be that exciting in crypto today, but nonetheless, positive price action continues in the equity markets. Crypto-related equities, like you said, Coinbase, still chugging along, and I'm actually going to start with that because I think that's a good starting point. We've been talking a lot about it this last like 3 weeks, particularly you have been talking a lot about it. And, I see Ryan in the comments thanking you for your coin trade. That's what it's all about, is helping, people identify good opportunities to make money. And I think you did a great job with this Coinbase trade.
I could
But
still don't screw it up. We could still screw it up, all right? Just enough
that
of the
sounds like a man.
congratulating. Let's be
That sounds like a
grateful and move on.
That sounds like a man speaking from experience. But good morning, Ross. But let's take a look at this Coinbase chart, because even though it's been, this is a straight up hockey stick, no doubt about it, right? And we're coming up against some critical resistance that we hit back in almost exactly a year ago, which is pretty crazy to think about. That it's almost August 3rd, and Coinbase was trading at around the same price. But where was Bitcoin at this point in time? It wasn't showing the same sorts of positive price action. The space didn't have the same sort of similar sentiment, being positive sentiment around it, with people investing tons of money into the crypto related equities like Mara, like Riot. All of these stocks have performed tremendously well in the last 2 weeks. That's no coincidence. The BlackRock ETF, everything, and then the Ripple lawsuit, all of that bringing that positive sentiment we needed in order for price to really take off. Um, that may slow down this weekend, but taking a look at the NASDAQ, CJ, I mean, this thing looks like it's going to continue to rip. And if we look at the Magnificent Seven, as they've been dubbed, some of the names that are looking particularly good today: Microsoft coming up to retest the highs, gapped up nicely. Got to clear that 350 level. If it clears that 350 level, that's a big time buy signal for me. I still think this one runs up into earnings. And I said it yesterday. I said it in our AMA as well. All of these Magnificent Seven stocks, take a look at where their earnings are placed, right? And CJ, you talked about hedge fund market wizards yesterday, Como Shea, knowing when it's raining. Right now is when it's raining. Like, it is pouring out. And, I think you need to step outside and get some exposure, hypothetically. And one asset that I like in particular, and I talked about this with our community in Discord earlier in the week, and it's already panning out very nicely. But one that I really like is Google. And Andrew Hawthorne, a member of our community, also pointed this out. It's kind of been a laggard amongst the Magnificent Seven, but this for me today is one to keep an eye on. We're approaching breakout levels, which is true for a lot of the assets in this watch list here. But I think Google, Alphabet, has the potential to really run up into the earnings on the 25th. And as a result, we could see prices up in the 130 range. So that's what I'm seeing for the Magnificent Seven. And as for your Coinbase trade, CJ, honestly, I still like it. This is a breakout level. We're above 100. I didn't think we'd hit it this quickly, but we did. And now that we have, I think we keep grinding higher into earnings once again, So basically my premise for the next couple weeks is green light into earnings. People are gonna be risk on. There's been a ton of sideline capital all throughout the last 3 months, and you're starting to see it pour in. First poured into the crypto related equities. And also, some of the big names in the queues. But I think now that earnings season's upon us, we're going to continue to see that money flowing in and prices continuing to rise. So that's kind of just my general thesis on the overall market. But anything you would like to add from that perspective?
Yeah, I'm just bringing up a couple links here that I'll share in just one moment.
For sure.
Yeah, so the first one, just figured I'd mention this since we're on the subject of Coinbase. Barchart.com reports that Coinbase is due for a 40% drop, says Bank of America. They believe the company will miss earnings expectations substantially. Yeah, not until they added XRP. That's kind of funny. I think those are lagging metrics of like last quarter, anyways. But
Yeah.
it is interesting. I think when you have a Bank of America account, like most people who have had a Bank of America account linked to Coinbase, who've tried to withdraw or deposit, will usually run into like trouble. Or I've heard stories of them having their funds frozen. I don't know. Maybe there's a connection. Maybe there's not. Anyways, let's get back to the markets, which is mainly what we were talking about. Where, I really like this very simple way that Alex Weiss puts it. We're not even close to the ETF day. Nothing is a security, evidently. And now, like, ETH is really like kind of front running, or at least has in terms of like the beta rotation. Um, a lot of these have been front running events, whether it's the Bitcoin CME futures launch in 2017 or the Pro Shares sharply in October of 21. So I think the playbook's like very clear. Monte, you said long until earnings. I agree with that for Coinbase. As for Bitcoin, I mean, the thesis generally, it's always going to be a marathon. It's not going to be a sprint, but I still think the thesis is long until the ETF, and not much has really changed. I still like
Yeah.
Lido. I still like Pepe.
Yes. And
Don't have to
speaking
change
of
that much.
Speaking of both Coinbase and Pepe, I've heard whispers that Pepe is going to be listed on Coinbase. Nothing official. Don't come hunt me down if it doesn't get listed on Coinbase. But there are rumblings that it is going to be listed on Coinbase. And you know what that we've talked about it in the past, the Coinbase effect. An asset gets listed on Coinbase and it immediately pumps. I think that would certainly be the case for Pepe, given the fact that Coinbase's target audience is much or very much retail based. So, you know, we know retail traders love altcoins, they love meme coins. I think Pepe could massively benefit from a Coinbase listing.
Just wait till they get the Robinhood listing, or if that happens. That would really
Options.
be something.
Yeah, but beyond Pepe and Lido, any names in crypto in particular that you're looking to trade? I know you we're talking about moving some money around, looking at some assets that look particularly favorable. Anything beyond Pepe that you're taking a look at today?
Just strictly crypto right now. We're talking.
Or commodities. I know you've and FX has been absolutely insane as well. With the dollar. I mean, what a week for the dollar. What a bad week.
Yeah, I think you have to say, like, I took off all dollar trades or like inverse dollar trades because it's just such an insane move. Everybody was talking about it. I actually am thinking about buying some and just putting a very tight stop, and then like if it works, adding half of the additional size. There's nothing really in my system to tell me to do that. Um, it's just kind of a purely sentiment thing. It reminds me of when the euro and the pound basically went to parity. I think pound went to like, or no, it was the euro, I think, that went to like 98.
Yeah.
Anyways, that sentiment feels very similar to what we've experienced in terms of how much people have been talking about the dollar this week. So we'll see. Maybe we'll see a little bit of mean reversion. Maybe we won't. But either way, that's something that I've kind of been watching. As for like commodities or futures specifically, I guess I'll present one chart. And, I don't want you guys to necessarily copy these trades. I just want to go through the process so it can make sense so you can do it in your own trading. But we talk about yen, for instance. Like this is the primary example. It's like you start to see this bottoming pattern. There was levels of commercials that were very, very short, or excuse me, very, very long, for quite a long time. They were in periods of accumulation going back for the previous month. However, they can be in periods of accumulation for a very long time, which is why it's important to wait for the bottoming defined risk and the inflection point that ultimately comes. And we got that with the yen. So this trade, there's probably been a massive amount of shorts that had, shorts that had to cover, and now the perceived kind of edge in positioning is somewhat gone. However, we still do have a crowded trade in terms of coffee and how this thing's been beat down very severely over the past few months, and this is one of those that has just gone straight down, and like yen, like coffee, and like cocoa, for instance, here, these trends can go on for a long time. So it's very important for me for the trend to start showing me something in terms of defined risk and some strength before I want to like get in on a long. Because if the long's going to come and be forceful, I mean, all we really need to do is go back to the yen chart. You don't have to buy the exact bottom. Like as soon as we start kind of moving, and I had posted kind of about this in the TradFi inner circle going back, and just, I want to show the technicals of what we're looking at when it comes to yen. So the post here was yen was starting to bottom, defined risk after a long downtrend, creating that deviation. We're getting there with coffee. If we were to go to kind of a similar 15-minute perspective or like an hourly perspective. Yeah, like if we close up there, I feel like if we break this resistance level, decent chance we get a short squeeze or take out, 173. So, this is starting to show me something, and something that I'm going to be watching very carefully. And, I'm not kidding when I say these squeezes can really be favorable. We've seen a lot of them in the past month. Obviously, the example I keep going back to is like yen. Obviously, in fixed income, we had another one that happened this week. But as far as like the commodities sector, I think one of the coolest examples of this type of trade was from soybean oil, which happened, about a month ago, right at the end of May. That's when the bottom got put in. And once that trend started to show me something, or once it starts to show you something, there's potential of a serious squeeze that could be happening. So, I mean, we'll see if something like that kind of continues with coffee. But I think if we close above today's high, we close above 160, I might take a look at longs there. At the very least, risk is very clearly defined for you. Any thoughts on those charts, Monte?
No, no. I think you did a really nice job covering it. I mean, that yen trade has been absolutely crazy. But it's kind of hard to take action in the FX market right now, given just where the dollar's at and everything that's happened this week. After a week of volatility like that, it's hard to take any sort of significant action. But I agree with that breakdown. One last thing that I want to cover before we begin to wrap things up, is just talking about some more crypto assets and how I'm going to be playing them heading into the weekend. This is something that I talked about with members of the community in the Discord. And, when you look at this chart, it is so tempting. Like, even me, like, I've been doing this for over a decade. And, like, I look at this chart and it is so tempting to short it, right? CJ, how have you lost the most money trading, whether it be equities, crypto, FX, commodities? What has led you to lose the most money?
Man, it's only cool when I bring it up. You're not allowed to bring that up.
I was asking you. I could have said it outright.
How much? All right. Yeah. How much? Where have you lost the most money?
I've lost the most money buying from time decay, most definitely. And that's my own fault for improperly purchasing options. But I've learned from that. So you know what they say: as long as you learn, you don't lose. But that money's gone. So forget that expression.
You don't lose. You're a.
As long as you learn, as long as you learn, that's BS. That's save that for the hippies. But anyway, look looking at this Bitcoin Cash chart. Um, you know, it's going to be incredibly tempting to short these assets, and it's not just Bitcoin Cash, right? CJ, you mentioned XLM and um, XRP beginning to retrace, right? Uh, this is the quintessential definition of what I would consider to be a short trap. And let's just quickly check out CoinGlass and see the funding rates, because this is actually pretty notable. Positive funding rates, like look at this for Solana, 0.03. If you want to get long Solana right now, I'd be a little bit careful because that is a bit of a crowded trade. Then again, look at this trading volume up massively. Look at XRP's trading volume up 5,300% in the last 24 hours. Not surprising, but still pretty staggering. And same with Cardano, up 877%. Price is up 20% in the last few hours. But getting back to my point, look at some of these assets. Look at Comp's funding rate, negative 0.12. That is incredibly negative. If you wanted to get into a comp position, you would have to pay a significant premium to do so. Oh, whoops. So right now, there are people that are trying to short this with vigor. And that is evident from this funding rate here. And like I said yesterday, anything that gets above 0.03, I would kind of stay away from, because then it's entering the realm of being a crowded trade. We're talking about 0.12 here. So overwhelmingly negative. Then on the other hand, you have Pepe. This meets the criteria for a non-trade for me because it's above 0.03 to the upside, right? People are heavily speculating into this one. That being said, that rule isn't it's not a law, it's just a rule that I follow to trade. That doesn't mean Pepe can't keep climbing. In fact, I think it will. But just note that it's getting more crowded. And then lastly, what's interesting to me is that XRP still has a positive funding rate. So people aren't trying to short this one just yet. So it could plausibly continue to drop, but once this flips negative, I would be very, very cautious about shorting it. And let's just quickly check XLM. See, this one yesterday was very positive and now is almost exactly neutral. I think that once you can see that, it got very positive and then it also got very negative, but, they kind of cancel each other out, and the funding rate is essentially neutral for this one. I would be very, very careful for a possible short squeeze to the upside in XLM, in XRP, and in comp. So I know there is profits to be made shorting assets. Of course there is. That being said, there's way more money to be lost shorting these assets because a squeeze can happen very quickly. If it moves against you, you may not have time to get out. That's why you basically, I encourage you to check those funding rates, check to see if the trade's crowded before you enter. Right now, this one isn't that crowded, could plausibly grind down further. But if it does, I expect it to become crowded and more people to try and enter with the goal of retracing it back below 1 cent. So that's what I'm seeing for XLM. Just basically the main takeaway is be cautious, because although these may look like some pretty juicy short opportunities, I would refrain from, rushing into anything because the market's like overheated right now. It's like an engine that's overheated and you need to let it cool down a little bit. That being said, I still think there are opportunities to the upside. CJ, I know you're still trying to get some exposure to Pepe to the upside.
I actually just did. I didn't screw myself over by sending a Ether to a Arbitrum contract. It ended up going through to MEXC. So I've done that before. When my first journey into crypto back in like 2016, 2017, I remember sending, I think, all of my Monero. It wasn't a lot at the time, but they needed you to include like this privacy ID or some extra thing that you didn't have to include in Bitcoin and ETH transactions at the time. And I just hit send.
Yeah.
So
Well, you're not alone.
it happens to all of us. I think it's,
There's
what did you say so poetically earlier? If you learn, you don't lose. Wow.
Yeah.
That is just very heartwarming.
Yeah. For a trader, I'm a pretty philosophical guy, CJ. But yeah, no, anyways, what were you just saying?
Something about Pepe,
Yeah.
Monero.
Oh yeah. I mean, you're not alone in that. I think the number is now up to 6.8 million Bitcoin that have been lost in transactional errors. Like, that is staggering. Out of a 21 million total, 6.8 will never be touched again. So it happens.
Especially if I no.
Don't finish that sentence.
Okay.
Anything else you'd like to share before we wrap up today's episode? And Ryan, yeah, you're a better man than I am. I don't have a wife though. So I spend my money on myself, and that's another thing is like days like yesterday. Okay. You have a great day. You gotta be disciplined and take some profits. Like, the market's not going to run forever. I do think we're in what is the beginning of a bull trend for crypto. I think we got all the bullish catalysts we need for price to take off. That being said, I took a lot off the table yesterday because I had been waiting patiently for a move. We got it. And although it may continue to move to the upside, profits are profits. And I took them, and some I used to buy things for myself. Others I am going to redeploy back into the market. So that's the way it works. You got to take profits. Don't get religious with this shit. Don't be like, oh man, Pepe is going to $1. I'm going to get rich off this and be able to retire. No. And I'm not preaching to you directly, Ryan. I'm sure you understand this.
I feel like you're preaching to me because this is all of my current thought process.
I am preaching to you a little bit. No, you do a good job of taking profit, definitely, and disciplined trading. I think is incredibly important during times like this because you're seeing parabolic price action, you're seeing euphoria, you're seeing all that stuff that leads to irrational trading and irrational price action. So the one way to counteract that would be discipline in terms of setting your stops, entries, exits, and sticking to them rather than being like, oh man, this thing's still running. I'm going to keep riding it even though it's already hit my target. No, don't do that. be disciplined, and take profit at your target.
Yeah, I mean, it's all about what matters to you, I guess. What's that famous saying? Everybody gets what they want out of the market. So I really do believe that. Um, anyways, hope you guys have a wonderful day. Don't forget to check out tradethechain.com if you'd like to hang out with us. It's a 14-day free trial if you visit tradethechain.com, free member Discord where Monte and I share trade insights and actual ideas. So you can get access to that there, as well as a sentiment dashboard of various assets, which is pretty cool. So check it out at the link below, and we'll see you guys there. We'd love to have you. But hit like and subscribe if you enjoyed the content today. We appreciate it, and have a great weekend.